Following Elon Musk's takeover of Twitter, General Motors made the decision to pause advertising on the platform as it engages with the company to understand its direction under new ownership. Yet, this is an irrelevant move that shouldn't have anything to do with who owns Twitter. While Elon Musk does run Tesla, GM's competitor, these are separate companies that have little to do with each other. The decision for General Motors should be based on their dollar return for advertising spend. Perhaps they believe that they are giving Elon Musk more money, but the richest man in the world seems to already have the resources he needs, and then some, to run each of his firms. And so GM's abrupt reaction may be hurting none other than GM itself. The company, run by CEO Mary Barra, is trying to distance themselves from Tesla, but remarkably at the same time trying to copy them. If anything, General Motors' issues with Elon Musk at Twitter is the least of their problems. And before we continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. Earlier last month, General Motors formed a new business unit called GM Energy, which aims to offer stationary battery packs, solar panels, chargers, and hydrogen fuel cells. This was a bid in order to help GM double its revenue to $280 billion by 2030. GM's vice president of EV growth operations estimates that the total market size for GM Energy is $125 to $250 billion. Therefore, unless GM plans on capturing close to 100% of that market, most of their revenue growth would still need to come from the EV division in order to hit their targets. Now, moving into the energy business makes a lot of sense on the surface for General Motors, since that's where the industry is headed, and energy products complement electric vehicles. GM will be partnering with utilities, including Con Ed and PG&E, and they'll also be leveraging a partnership with SunPower to install home systems and provide solar panels, suggesting that GM is not directly getting into the solar manufacturing business, at least not yet. But it appears that GM is trying to do everything and anything, perhaps to try and look more like their rival Tesla. If that's the case, then they may run into some of the same troubles that Tesla has been dealing with for years. Batteries have always been a constraint on the company and the industry, and because of that, Tesla has had to starve their energy division of batteries and prioritize those batteries towards the vehicles. So while GM intends to bolster revenue by starting to sell home energy systems as early as late next year, they would need to have an excess of batteries in order to provide for both their EVs and their battery storage units. General Motors has been working on their Ultium battery platform, and so they do have more capacity coming online soon, starting with the Cadillac Lyriq, which will be the first vehicle in 2023 to make use of the Ultium batteries. However, the company is releasing a series of new vehicle models around the same time, including the Chevy Silverado EV, the Blazer, and the Equinox. The company is already behind on its electric vehicle sales targets, having multiple setbacks, especially with the Chevy Bolt, which was halted at the beginning of the year due to battery fires. But now the main constraint appears to once again be batteries. Almost all of GM's new electric vehicles are simply electric versions of their ICE counterparts. While they may be redesigned to support an electric powertrain, GM is well known for mass-producing cars at scale. But for electric cars, one of the main bottlenecks has been and will continue to be batteries for many years to come, as the EV industry needs to grow rapidly in size to match ICE vehicle sales. And so now that General Motors is moving into the energy business, it's likely that they will run into the same issues as Tesla, needing to use all of their batteries for cars, as it makes more sense to do that from an environmental and gross margin point of view, which will benefit their earnings more, versus putting the batteries into stationary packs. Thus, GM Energy could be starved for many years after it launches, or it will take away from the already lagging vehicles business. Strangely enough, they also want to sell hydrogen fuel cells, which is a surefire sign that GM is having trouble focusing. that may already be apparent with the move into the energy business before they've gotten their vehicle division on track. But hydrogen fuel cells will require a completely different set of research, know-how, equipment, and partners, which thins out the company resources that should be focusing on more critical aspects of the firm. Not to mention that Elon Musk has reiterated that hydrogen fuel cells are stupid, and he's had experience using hydrogen-based systems at SpaceX and decided against them for various reasons. GM still seems to be trying to find its way with no clear vision, so they're saying yes to everything, whereas successful teams that are focused on the mission of the business tend to say no to unrelated projects more often. Moreover, in a recent interview with CNBC, Mary Barra discussed the Chevy Equinox, which is also slated for next year. She stated that the vehicle was packed with technology and a 17-inch screen and will be coming in at a $30,000 price point. However, she was immediately called out by CNBC host Phil LeBeau, who outlined that we've seen this from many automakers before who say they're going to come in to under $40,000 for their vehicle, and then when production hits, the vehicle ends up being priced far higher than that. He asked if Barra can promise that this vehicle will come in at $30,000, but she can't seem to confirm her previous statement. She replies a little indirectly, saying that GM will offer all trim levels and that they will have an entry-level vehicle. This is a good marketing tactic to frame the vehicle as a low-cost one in consumers' minds, but we're well aware of the inflation that's been ravaging the car industry, and competitors have had to raise prices significantly already, so GM could be setting up their customers for disappointment if raw costs are causing prices to get out of hand. Now, GM has their $2.3 billion Ultium battery plant in Ohio, which they are in the process of ramping up, and it's expected to have a full capacity of 40 gigawatt hours. It will need to support their upcoming cars, including the Lyriq, Equinox, Blazer, and Silverado. Yet they're still having trouble getting the Chevy Bolt, a small car with a small battery, to truly scale. Or the Hummer, a monstrous, higher-priced vehicle with a massive battery. In the third quarter, GM reported sales of 411 Hummer EV units, compared to 272 in the second quarter. While these are lackluster results, the Chevy Bolt EV and EUV had their best quarters ever, selling about 14,700 units, and the company plans to boost global production from a total of 44,000 units to 70,000 units in 2023, citing unprecedented demand. But digging deeper into these numbers, if the current capacity is only 44,000 units, that's 11,000 units per quarter, yet they delivered 14,700. So there must have been vehicles built in previous quarters that were only delivered in Q3. So when they talk about a production boost to 70,000, that's actually only a small jump from their most recent quarterly results, 14,700 to 17,500, about a 2,800 vehicle increase for a quarter. It may also be worth noting that 70,000 EVs isn't that many. If each of their 6 models that they plan to have on the market reaches 70,000 units eventually in the coming years, that's about 420,000 vehicle sales, about 6% of GM's total sales. They also have to maintain many different designs, stock their dealerships with different models, perhaps calibrate and configure driver assistance features differently for each type of car. Tesla has already delivered about 500,000 Model Ys this year and is on track to hit over 750,000, and this is just one vehicle model. Even the Chevy Bolt numbers are the combined EV and EUV units, which are essentially 2 different vehicles. So GM's goal is to sell a few of every model, but to have countless different models, swarming the markets with optionality, as if they don't actually know what their customers want, and at the same time increasing their own overhead. To further that point, General Motors just announced a Hummer EV electric bike to complement its slow-selling 9,000-pound Hummer truck. The bike costs $4,000 and should have an approximately 1 kilowatt-hour size battery, and they plan to offer this bike at their dealerships. Now, there's nothing wrong with an electric bike, but the problem is that their vehicle business is clearly not the focus at GM. even if they hit their ambitious 2030 targets of electrifying only 50% of their fleet, then they're leaving the other half of their business up for grabs by other players. But with this lack of focus, it will be a miracle if GM can achieve its goals in its core business. Amazingly enough, General Motors had an electric bike project, and it was killed by the company just 2 years ago in 2020. At the time, they made this decision by taking a hard look at their various businesses during the pandemic and deciding to shut down this one. It's interesting that although the bike was canceled, another one crept its way back into GM's roadmap. This almost seems like a failure of management not being able to harness the company's direction. While a bike may be successful, the automotive division needs attention as that's what drives the entire firm's revenue. But what may come as the biggest upset to investors is that General Motors won't be able to qualify for the full $7,500 tax credit that starts in 2023 thanks to the Inflation Reduction Act. Both GM and Tesla were really the only two automakers that had lost their previous $7,500 tax credits after hitting the 200,000 vehicle threshold, which triggered the credits to phase out. This was very good for both companies, having been able to take advantage of the full credit system at the time, whereas other automakers were not able to do so. And then, in a stunning turn of events, the new credit system offered by the IRA very much favors GM and Tesla specifically, since they have the highest vehicle output and otherwise wouldn't have any credits if it weren't for this new set of rules. However, in order to qualify for various credits, GM's electric vehicles would need to be built in North America and source battery materials from countries with free trade agreements with the US. This seems like something GM should be able to obtain. However, according to CEO Mary Barra, she recently stated on a Bloomberg analyst call, "We think out of the gate we're going to be eligible for the $3,750 and will ramp to have full qualification in the next 2 to 3 years, getting up to the $7,500. It just takes a couple of years to ramp up based on our expectations with the supply moves that we've already made." It's surprising that it will take up to 3 years for General Motors to qualify for these credits. Conversely, Elon Musk stated on the most recent Tesla conference call that they'll be able to get the full credit likely from the get-go. This will set General Motors back by another $3,700 on each vehicle relative to their main competitor. This doesn't bode well for the company, as Tesla, which is already dominating GM with their Model 3 and Model Y, will now have even more pricing power thanks to credits which are equally accessible by all automakers. Many have quickly shifted their projects into the US to qualify for these lucrative credits, including General Motors. They're lucky to have the Ultium battery factory being built in Ohio. But for it to take another 3 years to qualify for the $7,500 credit is a little embarrassing for the company, which seems to have been caught flat-footed. 3 years is a long time for GM to let its competitors get ahead. For reference, Tesla has gone from its first Model Y deliveries at the beginning of 2020 to have the best-selling car by revenue by the end of 2022. It should be top priority for General Motors to get their supply chain and manufacturing plants in order to qualify for the credits. The gain in dollar value from being able to get the full $7,500 credit is worth as much as their electric bike, and there's no inventory or marketing required. But instead, by the time they qualify for the full credit, Tesla and other EV makers may have already eaten GM's lunch. So do you think General Motors is spreading themselves out too thin by investing in other non-core side projects such as hydrogen, electric bikes, and frankly even stationary storage at this point? Don't forget to watch our video here on GM's second government bailout. Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.